All right, today's Tuesday Tidbit is what are county loan limits? So every year, FHFA, which is Federal Housing Finance Agency, they are the overarching umbrella that holds Fannie Mae and Freddie Mac below them. Fannie Mae and Freddie Mac are, again, the government-sponsored enterprises that buy up the vast majority of loans. So every year, right around Thanksgiving, plus or minus a week or a week and a half around Thanksgiving, FHFA comes out with their county loan limits for the following year. What they do is they look at what houses are selling for across the country and they establish a base loan limit. That's called the conforming loan limit. That is the loan amount you can receive across the country. Alaska, Florida, Hawaii, does not matter. You can at least get a loan up to that loan amount and still have the loan backed by the government. That's important because the government has the best loan terms. They've got the best interest rate, the best mortgage insurance terms, just generally speaking, the best type of mortgage. Now, if you buy a house in Alabama or you buy a house in Denver, Colorado, or Boulder, Colorado, there's probably going to be a pretty big price discrepancy. Not all the time, but for the most part, right? So the government says, look, we know that's not necessarily fair. We're going to establish this base loan limit, and then we're going to have additional loan limits above and beyond that, what we call super conforming or high balance loans, up to specific county loan limits. So across the entire country in 2023, that loan limit is currently 726,200. So up to 726,200 is going to have the best rates. Now, super conforming would go up to 787,750. So $787,750 in Broomfield County, Adams County, Denver County, Jefferson County, most of the counties along the Front Range. Boulder actually has an even higher loan limit. It's even more expensive than Denver and those other areas. Boulder County, that loan limit is $856,750. So every year, again, they set a new base loan limit, and then they additionally will add on additional tiers based on the county that you're actually looking at. That's the county loan limit. That's super conforming territory, so above 726,200 up to that super conforming loan limit, those are going to have slightly higher interest rates. Anything above those super conforming loan limits is going to put you into what we call jumbo loans. Jumbo loans mean the loans are no longer backed by the government. Again, the government no longer has anything to do with it because we're above that loan limit. And it's now up to the institution themselves to lend out their own personal money. Typically includes higher down payment, higher interest rates, may have higher costs, may have different loan terms. Now, Elevation is a little bit unique. We will do 5% down jumbo loans up to 1.5 million loan amount. So we are a little bit unique in that case. We do not require necessarily 20% down when you get in jumbo territory like most institutions do. So that's what the county loan limits are. That's when they come into effect right around Thanksgiving of every single year. And that's going to apply for the following year. Hope that helps. See you next Tuesday.